All right, back with you tonight here on In Focus, Newzroom Afrika, Channel 405. The Automobile Association is warning of what it calls a catastrophic fuel price hike in November. Mid-month preliminary data from the Central Energy Fund shows petrol could rise by 99 cents per litre, with diesel and paraffin expected to increase by a whopping 142 cents, or rather 142 cents. Could have been a little bit more than that. The AA blames the increases on higher Brent crude prices. Fuel prices are affected by two main components: the rand versus the US dollar exchange rate, and of course the international petroleum product costs. The AA says increases in diesel and eliminating paraffin would be the largest in South Africa's history. It adds that motorists could cough up to 20 rands per litre by the end of the year should the current trend continue. Here to talk to us tonight about the impact of the fuel price increase and thus what this will have on the transport sector. I'm joined by economic consultant Matthew Townshend, as well as Sebastien Alexanderson, CEO of the National Debt Advisors. Gentlemen, good evening and thank you very much for your time. 20 rands per litre before the end of the year. Sebastien, is that very, very possible, a likely possibility?
It's very possible, and I think it's very likely. You know, with most South Africans already struggling to meet ends meet, this huge petrol price will have huge economic impacts on pretty much all of us.
And how long do we then begin to see the price of other commodities which are essential beginning to go up?
You know, it'll probably be almost immediate. You know, petrol prices have an immediate effect on raw materials, which is reflected in our everyday necessities like bread, milk, toothpaste, all the things that we need to put into a truck to transport to a store that gets into your basket that you take transport to get back home. It's all going to have an overall effect on all of our disposable incomes.
Yeah. What would reverse this, Matthew? I mean, we're seeing the performance of the rand, for example, to the dollar being a little bit better than previously it was in 2020, yet we are still seeing these hikes.
Correct. I don't see the trend reversing. The rand remains at relatively weak levels, and in fact, most of the risk is on the downside. So, unfortunately, I think from an exchange rate perspective, the risk is for perhaps even future increases, and then also energy demand there's an energy crisis globally. And also oil production, there's quite tight restrictions on that. So I think in terms of the supply of oil and the price of Brent crude, the likelihood is that might also go up in the coming months. So I don't see this trend reversing. I see it as a structural phenomenon that South Africa will have to deal with the higher fuel prices.
Yeah. Previously, we saw in such a situation with huge jumps in the price of fuel, government stepping in, saying to retailers, hold on, do not raise your prices. I'm not quite sure what the technicalities of that were in the back end in terms of the arrangements that were made. Could something of a similar nature be applied here, particularly considering that we are in this time of a pandemic and economically many people not doing that well?
I don't think that's sort of a feasible outcome. I think as Sebastien had mentioned, I think what we're going to see is this fuel price transferred onto consumer prices. So I don't think there may be certain products and items where producers may be able to absorb the higher costs on the logistics side. But I think overall the consumers are going to feel the pressure from this increase, and there's not much from a regulatory perspective that can be done. I think to add more clarity to that answer, I think you must bear in mind the position that we are in, where we're obviously coming off the back of the pandemic. A lot of businesses are under severe strain. I think the looting that we've had earlier this year has amplified the pressures on businesses, and I don't think there's much room there for them to absorb further profit reductions. So I think this is, as Sebastien said, I think this is going to be a consumer problem, which we can unpack now how the average South African is going to be impacted by the fuel price increase.
Yeah, indeed. So, Sebastien, I was raising the issue of government stepping in. Others have said previously, well, if we didn't sell off our reserves for close to nothing, at least that could cushion us, maybe not for long, but at least for a couple of months. Do we have such an alternative?
You know, I really don't think that alternative is going to come into play. I think, you know, like always, the most vulnerable are going to be the most affected. Those people that live the furthest away from work, that got to travel the most to get to work and get back, are going to find themselves bearing the brunt of this. And I don't know if we're going to get the help that we want, the fiscal stimulus that we're hoping for in this case, in this circumstance.
Yeah. They're saying unless oil prices soften in the coming months, the fuel price is set to cause more hardship for South Africans. What does that mean in real terms, the oil price softening in the coming months, and what would be the factors that would lead to that kind of eventuality? Sebastien, you can take that one.
Sorry. You know, if fuel prices soften, if the price of fuel goes down, and we can bear the brunt, and we can get the residue of that coming across to us within the coming months, then I think we'll be able to benefit from that decrease in price. But that takes time. You know, when they say America sneezes, the whole world catches a cold. I think we need to wait for, you know, we're going to be hard pressed for that. We're seeing rise in inflation in the rest of the world. We're seeing rise in prices everywhere. There's no reason why we should expect that any of these prices are going to go down in the near future. And that's pretty much the grim reality of where we're at, I think, economically around the globe.
And then how does this get really passed on to commuters in real terms? I mean, you already mentioned, for example, everything happens on the road. So those trucks paying more for diesel, there is really no other hope for the manufacturers except to pass that on to the consumers. And how does this then filter down, particularly when you look at the debt situation, South Africans being one of the most heavily indebted consumers in the world, really, if you look at it?
Well, I'll give you a scary statistic. At the end of Q2 of this year, of 2021, the average consumer was in arrears on their overall financial situation by about 16,000 rand. So just sort of short of 16,000 rand, which means that most of us, and especially the upper middle class, is experiencing a degradation in their disposable income. So prices are already going up. We're already feeling it. And without the fiscal stimulus coming from any kind of government package, or without, you know, we still haven't experienced our COVID-free summer like the Europeans and the Americans, which produced, you know, a little bit of a boost for the economy. We're still going into our summer hoping for the best, and hoping to open up those restaurants, open up hospitality, bring back the tourists, and stimulate that economy. So for a lot of us, we're on our last chances, stretching that rand to as much as it can, hoping that, you know, we're going to see an uplift in the economy and a return to almost what we can call the new normal in the near future.
Yeah. And Matthew, how does that then translate into the transport on the ground? I mean, yes, trucks will continue to be moving because people have got to eat at some point. But how does this read into the rest of the movement of cars on the roads, buses and so on? And how does that then impact on the economy itself and how it performs?
No,
so I think
it's... Sorry.
That's for Matthew. Yes, Matthew.
I think the way to frame this answer for all of the viewers, Thabo, is now is the time when we really feel the pinch from having let the rail infrastructure erode to the point that we have, where the majority of rail appropriate freight is being transported on the roads. So as a result of that, you've got almost all general consumer goods, in fact, almost all goods with the exception of certain bulk items being transported on the roads. That higher fuel price is feeding into the logistics costs for all of those items. So the transport of all of your general consumer goods, all of your foods, your retail products, they are having a surplus added to the price of that due to the increase in the transport cost. So all of your consumers will eventually see that being passed on to them when they're buying their products. I think another area to mention and where this the fuel price impacts on the economy is it's not only a logistics factor, but it's also an input factor to many outputs that are produced in the economy. So many of your food items, even before they get transported to markets, on the farms, there's a lot of heavy equipment being run in the production of those goods. So already, even in their production, you're seeing higher input costs from the higher fuel price. Similarly with mining and all of the heavy machinery and so on, and all the other sectors that are reliant on vehicles within their production. As I say, what we're then seeing is we're seeing a combination of those higher prices in the production and the transport feeding through ultimately to the consumers, and bearing in mind the pressure that a lot of retailers are currently under. And then importantly, from an economic perspective, the primary growth, sort of primary means to grow the economy and to realize the NDP target, the National Development Plan targets, is for South Africa to promote its export sectors. Now, having higher input costs within our export sectors ultimately undermines the competitiveness of those goods on international markets. So it's not only hurting your local consumers, it's hurting all of your local producers who are having to export their goods and compete in international markets.
Matthew, bleak, man, bleak. Okay, Matthew Townshend staying on with us, economic consultant, and we also have National Debt Advisors CEO Sebastien Alexanderson. Do stay with us as well. We'll continue this conversation in a moment. Back with you, conversation tonight with Matthew Townshend and Sebastien Alexanderson, talking the catastrophic rise in fuel price and what this could possibly mean. Before the break, Matthew, painting a rather bleak picture from seed to plate. It looks like there'll be an increase from production, so farmers would need to put a little bit more in as far as their inputs are concerned, and so they will add that on to what they then sell to those who will process the food and eventually package it, take it on the roads and bring it to the retailers who will also add on to it, and that will translate into exactly what you put on your plate, or at least in your basket of food. Sebastien, we've seen, in recent times, even retailers selling groceries on credit now. Do we expect to see that more people will be buying food, especially the essentials, on credit?
I think it's inevitable. You know, like I said, more and more of us are falling into greater arrears with no real sight of getting out of it on the other side. Stores, you know, at this moment in time, and the problem with falling into arrears is that the banks run out of people to lend money to, and then the National Credit Act prohibits registered and credible lenders from lending money to the individuals, which means that inevitably the ongoing effect of petrol price hikes, which could have, which means that maybe we won't get our pay rises and because the costs are going to our petrol, and that consumers are stuck with these rising prices and having to borrow. If they can't borrow from the banks, they'll go to the micro lenders, they'll go to the loan sharks, the machinistas. It's got a spiral effect, and certainly affecting most of our vulnerable consumers more than anybody.
Yeah. From a debt advisor point of view, what is it that you need to do here to get rid of this headache? Do you change cars? You know, it's as always, you got to look at your lifestyle. I think most of us through the pandemic had to take real harsh looks at our reality, and make really hard decisions, hard cuts. A lot of us, in fact, every single one of us was affected adversely in a financial way, which of course has onwards effects on our mental health. But from a debt perspective, from trying to get a hold of your debts, your finances, what you can't do is run away from your arrears. What you can't do is stop listening to your lenders, stop communicating with your lenders. What you can do is empower yourself and say, am I falling behind? Do I need help? Should I be going and trying to borrow from the subprime market, from machinistas, from loan sharks, which will inevitably lead to
an overall failure in your finances, or can you seek the advice of a debt counselor who can potentially put you in a better situation if you get to them in time?
And Matthew, I mean, taking into account the potential impact of this increase on that entire value chain from seed to plate, what is it that we need to do in our economy? I mean, we've been talking a whole lot about the structural reforms that need to be put in place, particularly fixing that rail infrastructure, which could be something that could be assisting us at this particular point. Are those the low-hanging fruits that government should be prioritizing right now?
So I think there's 2 points that I'd like to stress to the viewers. In canvassing it, I certainly don't think either of them are low-hanging fruits. I think the first one is the improvements, the necessary improvements to the rail sector. There needs to be a huge proportion of goods shifted back from road back to rail. Now, I say it's not a low-hanging fruit because rail infrastructure is a long-term capital investment. It's a significant amount of funding that's required. There's obviously lengthy construction periods involved as well. And there's a lot of service improvements that Transnet needs to undertake in order for that correction of getting rail-appropriate goods off the roads and back to rail. So that is a long-term objective, which is and needs to continue to be a priority of government. I think another one which I'd like to stress to the viewers is what can government be doing to improve the public transport situation for many South Africans. Now, what we have, and it's what Sebastian's been talking about, and the term is transport poverty, is where you've got a number of South Africans, and mostly the poorer portions of the population, having to travel the furthest to work and spend the largest proportions of what are relatively low incomes on transport. Government has already in the last few years in the public policy space been involved in considering what can be done to better cross-subsidize public transport, what can be done to formalize and sort of inject more subsidies into the minibus taxi sector. How can your bus systems be more effective? So essentially to improve that public transport situation for workers so that a smaller proportion of their salaries go to transport and they're not seeing sort of a 1-to-1, a 1 rand to 1 rand sort of increase in the fuel price going straight into a 1 rand increase in their transport fares. So I think, as I say, that too requires